Hey, what is up guys? Hope you're all having a good day. This is not a video that I was planning on making this week, but I woke up this morning, it's Monday morning, and one of my Prime members, a guy that has been live betting with me for a couple of years now, he DM'd me and he asked me if I could go through my strategy for picking out which stocks to buy and trade on a weekly basis. If I could do it on stream to basically show him my workflow, how I do things. So Zips is a guy who is a professional poker player, and he also does a lot of trading, and over the years we've had a good number of deep discussions on the topic of trading and our different strategies. But we both basically over the years have been trading crypto, and in sort of like the last 6 to 8 months, I've been trading crypto for about 4 years with a moderate amount of success, but over the last 6 to 8 months I started to take more of an interest in stocks and getting into stock trading. And over the last 6 to 8 months, I've kind of been tweaking my strategy, learning from mistakes, tweaking, in exactly the same way that I built a winning system for live betting on MMA. And over the months, it's become more and more successful to the point where I'm now doing pretty fucking good at it. So, woke up this morning and just kind of recorded, a live stream showing my process. And I went into everything in quite a lot of detail. So I thought, you know what, I may as well put this on YouTube because a lot of other people might find it useful. Now, I've got to just preface that by saying I am a total noob. I have no idea what I'm talking about. I don't know if I'm on the right track here. I don't know if this is beginner's luck. I don't know if this is going to be successful long term. This is not financial advice. I am not a financial expert. I'm not a financial advisor. I'm a total noob. I'm a total idiot. I bet on cage fighting for a living. I don't know what the fuck I'm talking about. But I do work my balls off. I do tend to learn things quite quickly. I am pretty good at learning from mistakes. I have built a winning system before on live betting MMA, which is very, very difficult to make a profit betting on anything in life. So I've already kind of dabbled in this type of thing before. And on top of that, like I say, I have been trading crypto for 4 years, so a lot of the skills I learned trading crypto transition nicely over into stocks. So anyway, give this video a watch, and if you do like this kind of content, drop a thumbs up on it, boys. Give me a like on the video, and if you like this kind of thing, I might make more content like this in the future. I also want to say, obviously the majority of content that I upload to this channel is MMA, but it's very, very important for me to make it pretty clear that I am not an MMA guy, man. Like, a lot of people kind of like pigeonhole me and stuff, and if I put any other different type of content on the channel, people get pissed off about it, leave nasty comments, dislikes, telling me to get back to MMA. I am not about MMA. I'm about making money. You have to understand this. I didn't get into gambling because I loved MMA. I got into gambling because I wanted to make money, and I needed a way to change my life because I was fucking broke. So I understand, a lot of people watching this are going to want the MMA content, but understand you're going to, I'm more about making money, and that's why this topic is very interesting to me. I'm very passionate about it. It doesn't detract from MMA. It doesn't mean I'm putting any less work into MMA or any less time into MMA, but I am definitely planning for the future and hopefully setting myself up to have a pretty good future. Like I say, within the next 2-3 years, I would expect to be doing this, I'm not going to say necessarily for a living, but I would expect the bulk of my income to come from this. And honestly, on the current trajectory, I would say probably within a few years I'll be making a few $1 million a year from doing this. So I don't mind saying that on video, because once it's out in the universe, pressure's on me to achieve it. So I'll check that out there, and I'll work my balls off to get there. So anyway, boys, if you like this video, please hit the thumbs up. Hopefully I'll be back with some MMA content for you guys soon. If not, have an amazing Christmas. Really hope you love Christmas, boys. Hopefully the world gets back to normal soon. Hopefully you like this video. And yeah, take care everyone. Have a wicked time over the holidays. Eat loads of food, spend loads of time with the family, bust loads of video games, have fun. And yeah, wicked, boys. Nice one. I'll see you in 2021. Take care. We will just wait and make sure Zips is here, because Zips has asked me to do this, so we'll just wait. Cool. Alright, cool. Nice one, Zips. So basically, if you are here for the fight research stream between Roman Dolidze and John Allen, I'll be getting into that later on in the stream. There's going to be a lot of talk about stocks and stuff first, so I do apologise. Just skip ahead to that. But basically, in this stream, I'm just going to be like going over some stuff for Zips in terms of how I pick stocks to invest in on a weekly basis. So part of my like weekly routine is every Monday. Hey, what's up, Paul? So part of my routine is like every Monday I wake up and I get up really early because it's like garbage day. So like the bin men come collect the bins like super early in the morning. Now I just spend the first few hours of the morning just like going through stocks to invest in for the week. So the reason why I do it like that is because of the structure of the stock market. So actually we'll get into that in a minute. I know in Telegram that I put that I've only been trading stocks for 8 months, which is true. But I've been trading crypto for about 4 years. And the reason why I got into stocks was basically because I was doing pretty good in crypto. I have been doing pretty well in crypto for a long time now. And then during the coronavirus outbreak, obviously the stock market was in the headlines big time because of this huge dump. This massive dump here. And what happened was, obviously most stocks, well, not most stocks, a lot of sectors in the stock market, in the US stock market, had a huge V-shaped recovery. You look at the sell-off on Tesla here back in March, and then look at what it's done since. So coming from a crypto background, I was like, oh, this is pretty cool because everything has sold off and now it's kind of like bouncing, rallying again. But obviously the world is in chaos. There's rioting in the streets of America, record unemployment, the world is on fire. This shit is all just gonna fucking tank again. So even though I didn't catch the first huge dip, I just thought like the US economy was gonna go up in flames and fucking I would be able to make loads of money shorting this shit. So that's what I tried to do, and I got fucking destroyed. I got absolutely destroyed. Deposited like $1,000 like into an eToro account, and literally like within a week was down like 40%, just like that. Bang, just shorting the US stock market because it just kept going up and up and up. And now, if you're familiar with crypto, it's not really how crypto works. Like if we look at like the Bitcoin chart and we zoom out, there's a lot of volatility for the most part, right? A lot of sideways action. Whereas, the big bullish stocks in the US stock market just fucking goes up. All it does is just go up, 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 up. So here was this dick here trying to short this shit and getting absolutely destroyed. So, like anything, when I like fail at something, I'm never like, oh shit, that sucks, I'm not gonna do that again. I'm more like, why did that happen? What can I learn from it? So then I started learning, and then I kind of like started to figure this shit out, and ever since, I've done pretty well on stocks. So in this video, I'm just gonna be kind of sharing with you like my technique now for how I buy stocks every week. And it's super effective, boys. I will say it's super effective, and it's also crazy easy. So, basically, few rules I would stick to just straight off the bat. Rule number 1, I personally only recommend sticking to US stocks because I see a lot of people talk about fundamentals a lot and like kind of like the reasons why they're buying into like different stocks. Different reasons why companies are amazing, that kind of thing. The problem with stock markets now is they're very much like a political tool. They're really influenced by like governments. And so because governments have such a big impact on the stock market in their country, if you invest in like lots of stocks from lots of different countries, you have to kind of be aware of like the political kind of like political landscape for different countries, and that's difficult to do, especially at a time like this where coronavirus is causing fucking chaos, disrupting things all the time. So like if you had stocks in German companies and Italian companies and Spanish companies, you'd really have to be keeping a close eye on what the central banks of those countries were doing, and what the political parties doing, what the coronavirus situation's like. So I just think fuck it, I just stick to US stocks because you can keep a close eye on the political situation. You can keep track of what the Federal Reserve are doing. and so you can kind of, it's way easier to keep tabs on. Also, the structure of the US economy is quite clear as well. So I guess just keeping things simple is like what I would recommend doing. So everything in this video, this live stream today, is just purely geared towards US stocks. Like, you can apply this stuff to like stocks in other countries, but this, just for me, it's just way easier just to focus on US stocks. So one other thing that I would say, I don't ever recommend shorting ever, like, which is very, very different. Like in crypto, I would literally go short all the time, but in stocks, like, I never short US stocks ever. And basically it's just because if you think about how the stock market works, ultimately, like, the United States needs the stock market to go up, and it needs to keep it going up forever. And so there's so much upward momentum that you just don't want to be on the wrong side. You know, that famous saying, like, the guy that taught me everything I know about trading, Crown, always says the trend is your friend until the end of the trend. Like, every single time I lose in a stock trade is usually because I'm trending against the trend. Like 90% of the time is because I'm going against the trend. And ironically, that's why when I first started trading stocks 8 months ago, back in like March, that's why I lost. Because it was very clear Tesla was in an uptrend and I was trading against the trend. But I was too fucking stupid back then to too fucking stupid to realize that. So anyway, yeah, if you understand, so the way the stock market works, if you think about it, stocks over the long term in the US economy are more likely to just keep going up, because every single year the Federal Reserve just print more money. You know, if you look at, so how much money has the Fed printed in 2020? So the Federal Reserve have printed $9 trillion this year. And how big is the US economy? 20 trillion. No, that can't be right. It's got to be bigger than that. They can't. There's no way they've printed half of their entire. Maybe they have. That would be kind of crazy. Okay, a better question is, how big is the S&P 500? 23 trillion. Okay, cool. So the way that you've got to think about the stock market is, obviously it's a huge social issue if the pension market crashes. I think they call like 401ks in America. So the US government need 401ks to keep going up. They need pensions to keep going up. So if pensions go down, people can't afford to retire, and then obviously, the government has to support them. They have to, obviously, welfare, all that kind of shit. So it's in the government's best interest to keep the stock market going up. It's also a political tool. If your stock market's doing well, President Trump, Joe Biden, they can go and brag about it. It makes the US look strong to other countries, makes it look attractive to foreign investors, all that kind of thing. It's very much a political tool. You've seen Donald Trump use it as a marketing weapon. That's another reason why it only goes up. The biggest reason why you do not want to be shorting American stocks is because more money gets printed every year. And if you really think about it, right, this $9 trillion that was printed this year by the Federal Reserve, where does that money go? If you think about it, they give it out to people. And then what do people do with it? They go buy the new iPhone. They go buy the new PlayStation 5. They just go buy shit on Amazon. And then what do those companies do with the money? Well, they just buy back their own stock. It gets to a point where, realistically, if you look at Starbucks, how much more money on expansion or research and development can Starbucks burn through? It reaches a point where there's not a lot else they can really spend their money on. So they just buy back their own stock. So if you look at a company like Starbucks, how much money are they taking every single year from people just buying coffee, and that obviously just inflates that just gives them more money to buy back their own stock. They don't need to sell their stock because they don't need the money, and that just inflates the stock price because there's less supply and more demand for a stock like Starbucks. You just don't want to be shorting American stocks. It get you into a lot of trouble. So that's the first thing I would say. And again, I just got to fucking preface all this by saying I'm not an expert. I have no idea what I'm doing. I'm just a dummy. But I would say this has been these principles have been working well for me. And so if you are interested in stocks, this works well for me. I don't know if this is the right way to do it. If I'm right, I'm wrong. This just works for me. So then the next stage is it's really useful to understand like the structure of the S&P 500, because this is going to be a big part of how I do things. So if we just open up a new, let's go to say A4. Do we have A4? We want something portrait. This will be portrait, right? Boom, that'll do, perfect. So structure of the S&P 500 is, if you don't know, I may as well just cover it anyway, just for anyone watching it after the fact. So the S&P 500 is basically like the top 505 stocks in the United States, and I can't remember who was the first hedge fund, first investment company to build the S&P 500. I think it was Vanguard. I'm not 100%. They basically grouped the top 505 performing stocks in the US economy into what's called an index fund. So instead of having to invest in all these different individual stocks, you could just buy the S&P 500, and then the money you put into the S&P 500 would they would divide it up between all the stocks within the S&P 500. So if you buy stock into the S&P 500, you're kind of buying a little bit of every part of the US economy. So the way that works is you have SPY up the top. This is the S&P 500, and then underneath it you have all the sectors that make up the S&P 500. So you have like XLF, which I think is the financial sector, and then you have QQQ, which is like the tech sector, and there's about 10 different sectors. You'll have like retail, hospitality, finance, biotech, everything. There's like 10 of them. And then underneath that, you have all the individual stocks. So you'd have like, Microsoft. Oh, I can't write with this mouse. This is fucking shocking. But you'd have like Microsoft. You'd have like McDonald's, right? So the way this works is S&P 500 at the top, different sectors, and then the individual stocks that make up the sectors. So like in XLF, you'd have like Citibank and Wells Fargo. QQQ, you'd have like Google, Microsoft. Biotech, you'd have like, Moderna and, Abbott Laboratories, things like that. So the way that the S&P 500 works is, generally speaking, there's always like hot sectors. So like occasionally all sectors will move up together and they all move down together. But generally speaking, under normal circumstances, the way it works is money like rotates from sector to sector. So if you were to look at, for example, the S&P 500 chart, I like the futures chart because the candle structure's nice and consistent. There's no gaps. So if you look at the futures chart, so this was the big sell-off back during coronavirus, and you can see that if you go and look at any like sector, every sector had a drop at this time. But then certain sectors got hit harder than others. So like if you go to say QQQ, that's the S&P 500 chart. This is the tech sector chart. So you can see it did have the sell-off, but then it rallied way harder. But then if we look at like XLV, which is the healthcare sector, hasn't done as well. So the theory behind how I invest in stocks is you want to be basically following the money and moving with the money, because what you can do is you can have like a really diverse set of stocks, but the problem with that is your laggard sectors, your laggard stocks, like your healthcare stocks, aren't really going to be making you much during a slow period, when you could have all your money in big tech during this period and make a lot more. So there's ways that you can kind of see where the money is flowing from which sectors to basically park all your cash, so that what happens is, when money flows from, say, healthcare into big tech, you can move your money from healthcare to big tech and you can get this big run up. And then when big tech starts to cool off, like we've got here, Maybe the finance sector, which has been running well recently, is hot, and you can move your money from big tech to finance. And by doing that, you can rapidly compound your money because you're always moving with the momentum of the market. You know, a real problem with just investing and just forgetting about it is you have these long periods of consolidation where your money isn't growing because you're in these sectors which are just kind of going sideways for a bit, when you could be in other sectors which are rallying, because there's always something moving up in the S&P 500. Like I say, if you go back through the history of the S&P 500, there are like times when everything moves down in unison, but it tends to only happen like maybe once a year, maybe once every 18 months. So, you know, the vast majority of the time, there's always ways to like move your money around to make more. What is up? What is up, JB? What is up? Yeah, Paul, man. Definitely, mate. Definitely, mate. The Fed fucked me hard, dude. So, yeah, that's basically, it really helps to understand the structure of the S&P 500, because if you think about it, the US government need the stock market to go up. All the hedge funds, you know, the investment companies that manage people's pensions and 401ks, they need the fucking stock market to go up. But they rotate their money around all these different sectors. And the beauty of the stock market is there's so much liquidity, or the beauty of the US stock market is there's so much liquidity there. So it tends to move way slower than other assets. Because if you think about it, like you look at Ripple's chart, everyone loves crypto. But if you look at Ripple's chart, it's just fucking messy chaos. Absolute messy chaos. And the reason why that is because if you look at the market cap of Ripple, where are we? XRP. So the market cap of Ripple, $27 billion, right? Market cap of Ripple's $27 billion. So you can take $5 billion and you can move Ripple fucking 20% in any direction you want. In the big scheme, you know, when you've got, you know, $23 trillion in the US economy, or the S&P 500, $5 billion ain't dick. You can move Ripple 20% like that. But if you look at the market cap of Apple, the market cap of Apple is, I believe, if Google will tell me, yeah, so the Apple market cap of Apple is $2 trillion. So you buy or sell $5 billion of Apple, it doesn't do fucking dick to the share price. You need a big amount of money to move, you know, these high liquid assets a lot, which means it's way safer. The moves are way slower. You can see them coming if you understand the charts, and so you don't get smashed by rug pulls as easily as you can on lower liquidity assets. And because there's so much liquidity there, these huge hedge funds, like how many people's pensions and 401ks in America contain Apple stock? Probably a giant percentage of them, right? So if you think about it, when the price of Apple starts to go up or down, it's going to take a long time for these, you know, investment funds to move that money. And so you can pay attention to these moves in the charts and just piggyback shit. It's all about following the money. So in this live stream, I want to show you the techniques I use to follow the money. So now that you know, like, the structure of the S&P 500, this is so important. We can start to get into it. So I will show you, how do I start here? Where do I start? Okay, timeline. Let's move on to timelines. The timeline of the stock market is very important. So obviously it only opens Monday. Let's get rid of this abomination. And let's go back to SPY. Where are you? Oh, I like the futures chart. And I can get rid of this wedge, because we've actually broken out of the wedge, which means SP 500 probably going to be doing pretty fucking well, I would imagine, over the next few months. Anyway, so if you think about like the timeline of the stock market, so it opens Monday morning, which is why I do this as my process every Monday morning, and the stock market closes Friday night. It's open for 8 hours a day. So the way the timeline of the stock market works is generally what you will see as a general rule on a normal week. You will see green days Monday, Tuesday and Wednesday. What I mean by that is Monday, Tuesday and Wednesday stocks tend to go up. Thursday stocks tend to go down, and Friday they can do whatever the fuck they want to do. Like, it's very unpredictable. I don't know why it works like that, but the structure of the week works like that. Because Monday morning, guys like me who have got cash sat on the sidelines wake up and we go, right, what are we investing in this week? And so Mondays, all that money floods into the market and stocks go up Monday, Tuesday, Wednesday. So why do stocks go down on Thursday? Well, stocks go down on Thursday because leverage trading is very, very, very big, right? There's a lot of leverage trading that goes on in the world. But with leverage trades, you have to pay fees to hold positions overnight. You have to pay fees to hold positions over the weekend. Fees are higher over the weekend. So what you see is people start to slowly exit positions towards the end of the week, which means the price comes down. So generally what you want to do when you buy in on a Monday, you want to be thinking, I'm going to do my work here Monday to Wednesday, and then I'm going to slowly start to scale out of positions towards the end of the week. Now, this can bite you in the ass because maybe Monday morning, you get a huge gap up from like pre-market futures trades. But that doesn't bother me so much because, say, for example, I'm in a stock like Tesla and I exit on a Thursday or Friday and then it gaps up huge on a Monday. That doesn't bother me because from my perspective, I will have made my money on Tesla on the Monday, Tuesday, Wednesday. It's gapped up, it's run away from me, that's all good. But I've taken that gain, I've taken that money, and now I can move it into something the following week that is going to give me more gains on the Monday and Tuesday and Wednesday. Yes, I could have held Tesla, and had more gains because it's gapped up, but I also could have lost on Tesla. It could have gapped down, and on top of that, I will have paid fees to hold that position over the weekend. So I will hold positions over the weekend, 100%. I've got one position from last week. I hold Tilray from last week, which is gapped up today very nicely. It's got, fucking doing all right on Tilray. So I held Tilray last week. So it's up 9% today. Beautiful. So I bought into Tilray last Monday, which would have been the 23rd. Where is the 23rd? So yeah, so I bought Tilray on this dip. Nice little retest of 55 EMA. Boom, we buy in Tilray there. And what? In a week, we've made 37%. In actual fact, that's a 5x leverage trade. So I've actually made 185% in a week. Well, we'll get into how to show you how to do this shit. Don't worry, it's easy. But yeah, in a week, I've made 185% on Tilray. And as you can see from my day trades tab, I'll show you how I structure all this as well. From my day trades tab, that's the only thing I own. Because notice the color codes. Basically, the way I do it is, if I'm holding something as a long, I'll color code it green. If I'm watching something in terms of, I think it's a good buy, but it's not quite where I needed to be yet, the entry's not quite where I needed to be, I'll put it in my day trades list and code it as amber, just so I can keep an eye on it. And if I'm shorting something, I'll color code it red, but I fucking very rarely short. And most times that I short, it ends up biting me in the ass. So, yeah. Green long, amber is kind of like keep an eye on it. And these are the things I've already identified for this week that I'm interested in buying. So we'll go through each of those three in a little bit and explain the reasons why I'm interested in these three for this week. So, what's next? Where are we going to next? Yeah, so the timeline of the stock market's super useful because you should always expect to lose money on a Thursday. If you go back historically, look at Thursdays, you'd be amazed how often the stock market is red on a Thursday. Also, you want to use the S&P 500 as kind of like your guide. So, for example, we can see S&P 500 futures are down 0.43% today. So when you trade, so today as an example, the stocks I'm looking at, buying into this week so far, there's only 3 of them, but I might not buy into them today. Because if the S&P 500 is red today, generally speaking, the market is going to lean red. There will be some sectors that do well, but generally speaking, it's more likely that, the strong sectors today are slower than usual because the S&P 500's down. The weaker sectors are going to have a real bad day today. So if the S&P 500 is down today, which I'm not sure that it will be, because if you actually look on the lower term time frames, getting a bit of a V-shaped bounce right now. We'll basically have to see. But yeah, always use the S&P 500 as your guide. If it's a red day on the S&P 500, you might want to think twice about, buying in that day. Maybe look towards the end of the day in anticipation of like a green day the following day, if that makes sense. But certainly don't want to be buying in on a red day early morning until you kind of see how things go. Alright, what are we going to cover next then, boys? Okay, timeline tools. Do I talk about tools yet? The tools thing's going to be pretty complicated, because I don't really want to go too much into how this shit works, but do I cover tools yet? Alright, I tell you what, first of all, let's get into how I pick the stocks. So, basically what I like to do is I like to have between 8 and 10 stocks per week, and I like them all to be in different sectors, so that, because I know for a fact I'm going to get shit wrong, right? So, if I have like 8 to 10 different stocks spread out over 3 or 4 sectors, what I tend to do is I'll buy those stocks on a Monday, but then say for example I've got, 2-3 stocks in finance, 2-3 stocks in biotech, 2-3 stocks in, I don't know, like the tourist industry, and Monday comes and the financial stocks and the biotech stocks are performing well, but then if third stock, I can't remember what sector I used, the third stock isn't performing so well, what I can do is exit my positions in the laggard sector that's not performing well and hold on to the 2 that are performing well. So I'll take a little bit of a loss in the ones that aren't performing well, but then the other ones will do very well over Monday, Tuesday, Wednesday, and they'll more than make up for it and give me profit. So by diversifying on Monday, I can kind of see which sectors are doing well, which sectors aren't doing well Monday, Tuesday, Wednesday, and I can kind of like come in and out of whatever I need to come in and out of. Like, I would basically say like Monday is like a buying in and seeing how it goes day, and then Tuesday and Wednesday is where I make my gains for the most part. So the way that I first of all pick stocks is there's certain industries that I want to be in, and there's certain stocks that I want to be in, because the stock market for the most part is basically like a big popularity contest. So there's certain hyped stocks that are just hot right now. People are talking about them online. They're going up a lot. People just want to be in them, right? Check, we got nice one, Shroom. Cheers, dude. Yeah, I will upload it later. Cheers, Shroom. Nice one, mate. So basically, there's just certain... actually, I should describe how I structure my trading view. This is where it kind of splinters off, and there's a lot to do. Alright, so I'm quite a busy guy, so I don't have much time to spend on this. So what I've done, I've basically structured my trading view into different industries. So if you look at my trading view, I've got all these different industries, and I've basically put like some of the strongest stocks from each industry into these different tabs, so I can quickly check tons and tons and tons of charts very quick, and it doesn't take much time. I can just flick through them. So I've got like automotive, cannabis, commodities, construction, entertainment, all kinds of shit. That's just how I structure it. But there's certain stocks that will change all the time, that people are just super hyped about, that tend to perform like well because they just keep going up, like super hyped stuff like Tesla, Penn, CRISPR, Palantir is a big one at the moment that's been flying. So that's just kind of like another sector I like to keep an eye on. The reason why I say that is because there's certain things that I want to be in. So there's certain sectors which I think are going to do really well over the long term. They've been performing well in the short term. And there's kind of like that old saying, right? If you want to make money in investing, you just buy the future. You look ahead at like 10, 15, 20 years. You look at what industries you think are going to be a huge part of the world that aren't a part of the world now, and you buy into those stocks. So the first thing I do on a Monday morning is I look into those sectors, the sectors I want to be in, and I see, from the charts, which stocks in those sectors might be performing quite well. And quite often, to be honest with you, most weeks, I can fill up my 8 to 10 stocks in a week just from those hot sectors that I want to be on. So the hot sectors that I like to be in are electric vehicles, so stocks like NIO and Tesla, super hyped right now. I want to be in those because they're just fucking going up like crazy. Look at the daily chart on NIO, been doing well on NIO recently. Other sectors I want to be in the cannabis industry. there's just massive growth in the cannabis industry. You know, every single year, more countries legalize cannabis, more states in the United States legalize cannabis. Therefore, over time, the market cap is going to grow. Therefore, you know, the lead bulls, the strongest companies in the cannabis sector, the stocks have got so much room to grow. So that's a sector I want to be in as often as possible. Another sector I want to be in is solar. You know, over the next 20, 30 years, as fossil fuels levels start to deplete, renewable energy sources are going to become bigger and bigger and bigger and bigger. So the solar industry is a massive growth industry right now. I want to be in the solar industry as often as I can. You know, you just look, solar industry is experiencing a lot of growth this year. I want to be in the solar industry. Other industries I want to be in: gambling. Specifically US gambling stocks. I focus on Penn and I focus on DraftKings. You can see this beautiful megaphone pattern that I drew here. I've been in Penn for a couple weeks now, actually, on this nice little run up here. It bought on this retest of 55. Nice little run up, and I've exited my position on Penn on Friday, actually. When we started to see, you know, we got to the top of this megaphone pattern, and now we'll probably retrace all the way down to here, or maybe just the 55. But you can see clear megaphone pattern here where it's kind of like bouncing around in these range. Patterns are big in stocks. I won't go into that in this video, but they're fucking big. Anyway, gambling's another industry I want to be in. Every single year, you know, more states in the United States are legalizing online gambling, so I want to be in the online gambling stocks. There's so much growth. Like, literally, how can you lose? This shit is just going to go up. So what I will tend to do on a Monday, I will go through those sectors: cannabis, solar, electric vehicles, like I say, gambling. And I will, you know, try and buy into any of those stocks, you know, in those sectors that are doing well. The other sector that I want to be in is something I added literally last week, thanks to Ray Dalio, and it's China. It is China. I honestly believe that, you know, whatever your political views are, I believe that Joe Biden's presidency is terrible for the US economy, simply because China are just dominating the world. They're producing more of our products than ever before. They're even getting into electrical vehicles now, where you look at NIO, producing more products. You know, they make all our electronics, our laptops, our phones. You know, so many products and services that we're dependent on are produced in China. So China's economy is only going to continue to grow, whereas America's economy will continue to shrink. And the problem is, when you had Donald Trump as the president, he was kind of standing up to China and imposing, you know, trade tariffs and stuff on them. I don't think Joe Biden is a strong enough man to stand up to China. So over the next 4 years, I think China is just going to get even more gain even more ground on the United States. So I want to be in China, in the Chinese economy. I want to be in as many Chinese stocks as I can, because I just think there's going to be tremendous growth in the Chinese economy. I think it's really, really going to start to gain huge ground on the US economy. You know, there's been a lot of talk recently about how, you know, the S&P 500, you know, nothing lasts forever, how the S&P 500 may not see the kind of gains, you know, in the future as it did in the past. But I see, you know, Chinese index funds as potentially replacing the S&P 500. It is difficult to invest in individual Chinese stocks, but, you know, US investment companies like Vanguard and iShares, they've built Chinese index funds, which are basically like the S&P 500. I think FXI is like the 31 largest Chinese companies or something. It's an index fund. And so this is what I want to be in. So remember earlier on I said, you know, I only invest in US stocks, but occasionally I will make an exception. China is the exception. I'm going to be huge on China over the next 4 years. I want to be in China as much as possible. I want to be in China, man. I love China. Look at the skyscrapers. Look at the Great Wall. I'm just joking. But I want to be in Chinese stocks as much as possible over the next 4 years. Has nothing to do with my political views. I don't give a fuck who's the president of the United States. I just want to make money and buy a helicopter. And logically, I don't think Biden's a strong enough man to stand up to China. And therefore, I see the Chinese economy, you know, gaining tremendous grounds on the US economy. And therefore, there should be a lot of growth in Chinese stocks. So it makes sense to have, or to be in them as often as possible. Okay. So I'll get into how I identify individual stocks in just a little bit. But if on a Monday morning I go through all these sectors, solar, cannabis, China, electric vehicles, gambling, and none of those sectors are looking too strong, what I will then do is look at the individual sectors in the S&P 500 to see where the money is flowing. And the way you can do that is by using a chart called a relative rotation graph. Oh, okay, we got some questions. Sorry, boys. Zips is saying, do you end up selling and buying the same stocks quite often? Yes, mate, definitely. Like if Amazon is trending up for weeks on end, will you simply follow your process to buy on Monday, sell around Thursday, and then just take another? Yeah, I will do that, Zips. For sure, man. Yeah. And it really depends how the chart looks, dude. It really, really depends on how the chart looks. So, for example, say Penn. Penn's going to be a really good example for this. So, say, for example, and this is why technical analysis is brilliant. Don't you find it absolutely fucking conspiratorially suspicious how... Right, wouldn't it be fucking amazing if the 9th of November turned out to be a Friday? Is the 9th of November a Friday? Or a Thursday? It's actually a Monday. That's not what I expected. What I was going to say was, shit like this trips me out, where you can see we reached the top of this megaphone pattern on a Friday at the day where most people would be looking to exit positions due to leverage trades. That kind of shit just kind of interests me a little bit because, you know, you basically reach the end of a pattern, you know, a major point of resistance on a day where we know a lot of people are going to be exiting positions. It's just interesting to me how shit works like that quite often. But a really good example of how I would hold a position over the weekend or close a position is if we look at Penn. Ignore these three candles here, right? Say I've drawn this megaphone pattern. Say this was Friday's candle instead. I would probably hold it on the weekend because I would be thinking, you know, we're still 5.6% off, you know, the top of this pattern, which would be 5x leverage trade, still 28.5%. If this was Friday's candle, you know, we found nice support on the 80 EMA. You know, we've recently retested the 55 EMA. There's no warning flags on the jewel. You know, the MACD is in an uptrend. You know, we're not in overbought conditions on the RSI. If this is Friday's candle, I would hold it over the weekend expecting, you know, another 28% upside to retest the top of this megaphone pattern, this previous point of resistance. Whereas I'm definitely exiting Friday on this candle because we're right at this point of the resistance. We're right at the top of this megaphone pattern, and I don't want to hold the stock over the weekend and then see us gap down Monday morning, you know, back down to the 21 or something, which can easily happen. Now, it can swing both ways. We can gap up Monday and we can break out of this megaphone pattern and I can lose out on like fucking huge gains. It can happen, but I sleep better at night knowing, you know, if I bought in on where did I buy in on Penn? I bought in on Monday the 23rd. So if I've bought in here on this retest of the 80 MA, or even here, I can't remember obviously the exact point of the day that I bought in, but let's just go middle of the candle just for like average, right? Middle of the candle. You know, I've made my 6.5% at 5x leverage. I've made 25-30% on that trade. I'm happy. I'm fucking happy just to take that. If it gaps up another fucking 10% on Monday and I lose out on 50% gains, I'm happy. Like, I've made my money. I'll just let it run and I'll just go into something else. But that's kind of like my mindset on it anyway. That's just how I tend to work. It really depends on the candle close on a Friday. Yeah, it's not a hard and fast rule. So, for example, I've got one trade open at the moment from last week, Tilray. So the reason why I held on to Tilray is literally the only thing I held on to. So the reason why I held on to Tilray is, if we look at the daily candle, we've had this huge run up and then this huge sell off. But for me, when I look at this, for me, this is a perfect retest of the 55 EMA. 3 daily candle closes floating, just above the 55 EMA, and then we've bounced. And from my perspective, you look at this daily candle on a Friday afternoon. I love this daily candle because we're back above the 8 EMA. It looks like the MACD is just about to cross over. Ironically, when this new daily candle gets punched in today, the MACD will cross over. We're nowhere near overbought on the RSI. And the best thing I like about holding on to this trade is, if this is the previous high, we have literally got 38.5% to set in a lower high. Like, say for example Tilray's fucked, right? Say Tilray is going into the biggest, nastiest new daily downtrend of all time. It still has 38.5% to set in a lower high. So from my perspective, the probability of us setting a new lower high here, when there's a 38.5% gap between the previous high, it just makes no sense to me. It makes absolutely no sense to me. Like, we could be in a new uptrend because you got your previous high here and a new higher high. So we could just be about to break out and set a newer high. But I don't give a fuck about what Tilray does next. I couldn't give 2 fucks. All I know is the probability of us rolling over on a candle like that, the probability of us doing that is so fucking low, it's unbelievable. Even under the most apocalyptic, nastiest scenario for Tilray, all we're going to do is come up here, set in a lower high, probably here somewhere, and if we're really going to roll over and die, it does that. But we're not going to set a lower high here. It makes absolutely no sense. Not with 38.5% to run. So that's why that's the only trade that I left open. And look what's happened. We've gapped up $9.26. We've gapped up 8.6%. So not only did I buy in here, when was it? Was it the 23rd? 23rd I would have bought in. Where are we? So 23rd. Not only would I have bought in somewhere on this daily candle here, but if I just go midway through the candle for averages, I don't know my exact entry. That's a 31% gain, 5x leverage, 155% gain in a week. It's fucking nuts, man. It is absolutely nuts. And that's such an easy trade. Like, look at it. Look at the support it builds off that 55 EMA. Rally, sell off, find support, bounce. Is fucking child's play, man. It's child's play. And when you start going through stocks, you'll see this pattern. Like, oh man, honestly, like in this video, you'll see this shit is literally child's play. The thing that I absolutely love about stocks is there's thousands of stocks in the US economy. So every single week you can just find shit like this. It's all about your workflow, man. Like the way that and you'll see when we get into relative rotation graphs how the structure of the relative rotation graphs makes it really easy to check tons of tickers really quick. This is just one part of it where I can quickly, boom, what are the dailies looking like? Bang, 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 bang. Just go through tons of dailies. But the relative rotation graphs are all also structured in a way that makes it possible to just scrub through tons of tickers and cherry pick the strong ones, man. So I'm very happy to see Tilray do well today. Now, wouldn't it be funny if it wasn't, and then this video would be absolutely shit? But actually, Tilray's done exactly what I expected it to do. Look at that base of support there, man. There's no reason why this would break back down. There's just no reason. Like, it might set in a lower high today and then roll over. But over the weekend, there's just no reason why it wouldn't gap up today. So it makes sense to hold this trade over the weekend. And in case you're wondering what sector Tilray's in, it's a cannabis stock. Cannabis stock. Again, it's an industry I want to be in. All right, boys. All right. Okay, so next step, let's get into relative rotation graphs. So if you've been through, look, they might not, look, I'm not saying that those sectors are ones you should put a lot of weight into. Like, I don't know what I'm doing, man. I'm just a noob. But these are the sectors I want to be in personally. I want to be in cannabis. You might not believe cannabis has got a future. That might be against your ethics or whatever. I think cannabis is going to be legalized all over the world by the time I'm dead. So I want to be in the cannabis industry. I think online gambling is going to be one of the biggest industries in the United States. So I want to be in that. You know, solar's obviously going to be huge. You have to be a dummy to think the solar wouldn't be huge. Electric vehicles, you'd have to be an absolute fucking retard to think that electrical vehicles aren't going to change the world. These are sectors I want to be in. But if I go through all those sectors on a Monday morning and I can't find enough strong ones, I will then use the relative rotation graph to find sectors to be in. And the relative rotation graph is also really useful because it enables you to diversify, right? Because if you look at like the cannabis industry, the solar industry, the gambling industry, they are quite correlated in terms of them not being huge cap. The market cap for these companies aren't huge, and they are like riskier sectors, which means there is quite a lot of correlation between them. So, for example, gambling and cannabis will be quite correlated. Which means, if gambling's doing well, cannabis will be doing well. If cannabis is doing bad, gambling's doing bad. And the problem is, you look at the Tilray chart. Remember what we were saying earlier on about Apple? Apple's market cap is $2 trillion. It would take a fuck ton of money to move, Apple 13.79% in a day. Whereas Tilray's market cap is so much smaller, you can get these moves. So what I don't want is to be in, tons of volatile tons of volatile sectors on a Monday, because say for example I'm in 10 stocks on a Monday and I'm in solar, cannabis, gambling, and say we're in a period those three sectors are correlated and then they have a really bad beginning of the week, I don't want to be down fucking, what would it be, 13. I'd put stop losses. I wouldn't be down hundreds of percent, because actually exchanges on stocks force you to have stop losses. But what I'm trying to say is, say for example I was heavy on cannabis, solar, gambling, and then those three sectors, because they're all correlated, had a really bad Monday, Tuesday, Wednesday, I'd take a huge loss. So that's not really what I want to do. I like to have some more like large cap, like boring stocks in there, I suppose, like McDonald's, Coca-Cola, fucking Citibank, American Express, that kind of thing. I don't want to be like all fucking high risk. I don't want to be all solar, all cannabis. I want to mix it up a little bit. So once I've gone through all those industries, I'll pick out like a few strong ones, maybe half high risk and then half super safe. And then the relative rotation graphs are perfect for finding like the safer stocks. And that's another reason why I've started to get into China recently, because it's another way to diverse a little bit on a weekly basis. Because say the US economy is struggling, chances are the Chinese one's doing pretty well, and vice versa. So that's why I think it's pretty good to be in China. So anyway, relative rotation graphs. So if you go to stockcharts.com and sign up for their relative rotation graph service, I don't know how much I pay. I know it's not much. Like it's like an insignificant amount to the point where I don't even notice paying it. So I think it's only like $20, $30, something like that a month, but it's worth its weight in gold. So the way you use relative rotation graphs is go to stockcharts.com, click this, go down to RRG, and then you want to type in SPY. So SPY just tends to be, generally speaking, like the ticker most people look at for the S&P 500. So then you click the top one, and it loads up this chart here. So then what you want to do is select groups, and then go to the top one. So it says S&P 500 sector ETFs, and then it loads this up. So I just keep all the settings at 5 weeks. And as you can see here, remember when we were talking about the structure of the S&P 500, where you've got S&P 500 on top, and then you've got different sectors, different stocks underneath. You can see all the sectors listed here, which is quite useful because I always forget XLF is easy because XLF, F for finance, but the others, I forget them all the time. XLU and XLF are like the only two I remember, because XLU is easy as well because it's utilities. So this relative rotation graph, what it basically does is it shows you the flow of money between different sectors. Because remember what we said at the beginning of the video, every sector just takes it in turns to rally. So the way that this chart works is it works in a clockwise fashion, and it's split into 4 different quadrants. So remember, this data is basically summarizing, this chart is summarizing the last 5 weeks of price action. So what this shows you is, in the leading quadrant are the stocks that have been rallying for a long time, and they're starting to cool off a little bit. They're seeing money flow out of them into other things, and they'll go into the weakening sector, and then the weakening stuff will slowly move into the lagging quadrant, which means it's had a huge rally. When you see things in the weakening sector, it's probably in an equilibrium, probably in a tightening range, and then when you see it going into the lagging sector, it probably started to break downwards out of the equilibrium, or a tightening range into a downtrend. When you look at the improving quadrant, this is where, stuff is maybe starting to change trend and move back into the early stages of an uptrend. So this is the sector that you want to look at, or these are the sectors that you want to look at. So there's 2 different ways that you can play this. You can either straight up buy into these ETFs. You could literally, keep it really low risk and be like, XLU, the utility sector, XLF. They're showing a lot of strength. Money's clearly flowing into these sectors because they're moving into leading sectors. I'm just going to buy the XLU and XLF ETF. You can do that. You don't have to buy the stocks. You go to, in fact, it's actually sometimes easier to just buy the ETF. I think Evolve Markets, I don't think you can buy individual. I don't think you can buy individual stocks on an exchange like Evolve Markets, but I think you can buy the ETFs. No, you can't. You can only buy indexes. Oh well. But I know there are some exchanges which will only let you buy the ETFs anyway. So if you buy the ETFs, don't necessarily think you're not getting what you want. Pretty much the same thing. But personally, the way I like to do things is I don't like to buy the ETFs. I like to buy the stocks that make up the ETFs. Because if we click into, if we click into, say, okay, so the way I would look at this on a Monday morning is, if we just, how do I get off and bring the whole thing back? There we go. How do I color code it again? Tail, right? Okay. The way I would look at this on a Monday morning is, I don't want to be in the weakening sectors. They're like the last thing on my list because they're obviously performing, they're starting to slow down the most. I also don't want to be in XLI because that looks like it's had a lot of, a lot of upside and is starting to cool off. The things I want to be looking at are things crossing this black line here as things move from lagging into improving, because that's when you can start to catch the beginning of uptrends. So the ones that are interesting to me at the moment are XLE, which would be the energy sector, and then XLRE, which would be real estate, which is quite interesting. I will also take a look at all the other ones in the improving sector, but the ones crossing this black line are the most interesting to me. So the way you can approach this is you can either buy into those ETFs or you could buy the individual stocks. Now, I personally prefer to buy the individual stocks for a couple of reasons. In fact, boys, what I'm going to do, I am dying for a pee. I will be 2 seconds, boys, because this next bit is a little bit long-winded. So I'll just be 2 seconds, boys. I'll be right back. Any questions you've got about anything I've said up until this point, boys, drop it in the chat and I will get back to it as soon as I come back. I'll literally only be a minute. I'll leave the stream running. Sorry about that, boys. We are back. Sorry. Alright, boys. No worries, Paul. I'll get it uploaded, man. I'll get it uploaded. No, I'll cut it up. I'll cut it up. So I won't make it like the fight research thing. I'll get it cut up, boys. Nice one. All right. So the relative rotation graphs. So you can just straight up, like, say you think XLE is gonna start to fucking do big things. You can just go and buy the XLE ETF. Or the way I prefer to do it is you can just buy the lead bull stocks within that ETF. So if you go back to the drop down, so XLE is the first one we should look at. XLE looks like we don't know if the stocks within these sectors are going to be strong, but the relative rotation graph is a great way of getting a bunch of tickers that have a good chance of being strong. So for example, we can waste tons of time going through all these different stocks and trying to work it out for ourselves, all these different sectors, or we can just look at a relative rotation graph on a Monday morning and be like, right, money is clearly flowing into XLE right now because of this huge move that it's been on. So maybe we should go and take a look at XLE stocks, see what's going on there. XLU is moving into one of the strongest sectors in the S&P 500. Maybe we should go and have a look at XLU stocks. It doesn't mean we're going to find strong stocks within these ETFs, but it's a really good way to save us time and give us some clues as to what to look for. So there's two ways you could do it. Like I say, you can either just buy the ETF straight, forget about it, really nice, quick and easy, or you can look within the ETF to find the best performing stocks within that ETF. That's personally what I like to do, because remember at the beginning of the video where I said, what you want to be doing is following the flow of money, because ultimately what you're going to see is a series of, how many patterns are there in stocks or any asset? There's an uptrend, there's a downtrend, there's a tightening range, and there's a weekly equilibrium. Ideally, what you want to be in is shit that's always in an uptrend. So, ultimately, there will be stocks within these individual sectors which will be stuck in weekly equilibriums and tightening ranges, and then there will be other stocks that are in clear uptrends. So from my perspective, I don't want to buy into an ETF like XLE, because there will be a lot of stocks within that sector which may be stuck in an equilibrium or a tightening range, which will limit my growth, whereas I can just be in the stocks within that ETF that are in an uptrend. So the way you look into this, let's start off with XLE. So if you go to the drop down menu and you select XLE, it will then bring up a list of all the stocks that make up that index fund. So what's really cool about this is it actually then plots the individual stocks into these four quadrants. So we don't have to go through and check all of these individual stocks. We can start to see, okay, which individual stocks are crossing over into improving. And this is all about saving time. So what I would do, I would just go through all these stocks now, check the charts, and I would just start to try and find strong stocks to put my money into on a Monday morning. So the way I would do this, I've got two monitors. I would have this up on that monitor, and I would have TradingView up in front of me. But obviously, because we are learning, we will just keep this up. So the first one I would do is Oxy. Let's take a look at Oxy. So I would go to my day trades tab. I've already got three I'm keeping an eye on, but I would go Oxy. See what's going on with Oxy. So I would bring this up and I would go, okay, what have we got here? Straight away, I don't want to buy Oxy. I'm not interested in Oxy. Just because we're very, very high above the 80 MA, so we probably need to come back down and retest that at some point. The dual is showing me we're very, very overextended. MACD overextended, and we're in overbought RSI territory. I'm not interested in Occidental. Let's take a look at HFC, so we can get rid of that one. HFC. Holly Frontier. Oh, and by the way, I will invest in companies all the time, and I have absolutely nothing... I know absolutely nothing about the companies I invest in most of the time. So Holly Frontier is a lot more interesting to me. This isn't one I'm going to buy, but it's a lot more interesting to me. I will tell you why. There's a few things I like about this chart. The first thing I like about this chart is that it's in a beautiful uptrend structure. There's your high, there's your low. So you've got a higher low, higher high, higher low, higher high, And to me, it just looks like we're going to set in a higher low. The 8, 13, and 21 EMA have just crossed above the 55. We're nowhere near in overbought territory. The MACD is still relatively healthy, and the Jewel is still looking relatively healthy. What we probably see here on this chart is, I would imagine, at some point in the next day or two, we come down, test this 8 EMA. That might be a decent entry. We can see all the way along. It looks like this. It looks like this 13 EMA is acting as big support. So maybe we come down to the 13. But to me, this chart just looks like it's going to set in a new higher high. And then if we zoom out, look at this beautiful uptrend structure. All it looks like to me is it's going to set in a new higher low in this territory somewhere. We don't know exactly where. And then it's just going to do that. So I would actually put Holly Frontier on my watch list. There's not one I'm going to buy because I think we can do a lot better than that. But that's a good example for the kind of shit that I would look at. And when I'm looking at entries, so Holly Frontier is now on my watch list. I've never heard of this company before. But for my entry, I would go right down into the lower term time frames, and I would just wait for a nice entry on this lower term time frame. So it actually looks like, do you know what? It actually looks like this might be this actually looks like it might be a decent buy today, thinking about it, because it seems to have found support on this 21 EMA, and I could see it just finding support, bouncing off, curving up and setting a higher high. Especially, there's a key Fibonacci here on the Jewel. That's not a bad one. It's not a bad one, actually. It's not a great one. You could find stronger than that. Like when I was talking about the structure on Tilray, that is a strong as fuck buy. I want to look for those buys. This isn't a super strong buy. That's kind of the shit I would look for, though. So I'll keep an eye on Holly Frontier. Then you go to, what's the next one? Can we zoom in? How do we zoom in? I know we can zoom in. There we go. Let's see what these tickers are here. So that looks like XOM, Exxon, right? Exxon, let's take a look at Exxon. Exxon Mobil. Okay, pretty much the same chart. Everything I just said about HFC exists on XOM. It's literally the identical chart, so we can watch that one too. And obviously what I would say, what the beauty of these relative rotation charts as well, obviously all these sectors are going to be highly correlated, so there's literally no difference between the Holly Frontier chart and the Exxon. Look, as we flick between them, they're basically identical, virtually identical. Now, what you might find is, notice how the HFC and the Exxon tickers are on around about the same position on this relative rotation graph. Now, if we look at tickers like FANG and Velo and PSX, because they're lagging a little bit behind Exxon and Holly Frontier, when we go to look at their chart, maybe you see them down here somewhere. Maybe they're following, Holly Frontier and Exxon. Maybe they're correlated to them. Maybe they're not as far along in that uptrend journey. So let's check one of those tickers, because maybe we're not getting the best entry on these stocks. Although it's a pretty good entry, to be fair, because the 8, 13 and the 21 have just crossed above the 55. It's not a bad entry, but maybe if we look at some of the laggards, we can get an entry down here somewhere in anticipation of this growth. So if you take a look at like VLO, take a look at the VLO ticker. No, identical chart basically, but it's actually, the identical chart, identical. All right, if we look at what about HES? That's a bit lower down. HES. Hess. No, identical chart. Pretty much identical, man. Alright, identical. Anyway, you get the idea. If we look at, let's have a look at a couple of strong ones. So CXO, what does that chart look like? Concho. What? CXO. Basically the same chart. But you can see why this is in the leading sector, because you look at the structure of Exxon, you see lots of higher highs and decent retraces when you set in the higher lows, whereas with the CXO chart, Concho, it's just fucking straight up. Like you have a little pullback here and then straight up. So you can see why that's in the lead-in. That's just one example of how you can use these relative rotation graphs. Like I say, they don't always bring up the goods, and I wouldn't say these are particularly strong stocks to buy, but I would say they're worth keeping an eye on, because the uptrend, you might literally be catching the early stage of a new uptrend. Like, you look at this structure here, like it's been a long time. It's been a long time since you had a nice clean structure like this, because even the last time we broke out above the 55 EMA, we were kind of in a weekly equilibrium. Whereas here, this is a clear uptrend structure, so you might actually be catching... Well, it's been a long time. It's been a long time, man. You might be catching something like this, is the point I'm trying to make. You might be. You might be catching something like this. You don't know, obviously. You don't know. You might be running into something like this. But there's quite a clear shift in trend here. So, they're worth keeping an eye on. LYV. Let's take a look at what that is, mate. Live Nation. So this is going to be a recovery stock, right? Because there's no concerts at the moment. Yeah, this one I don't like, dude. This one I don't like so much. Actually, it's not that I don't like it. It's not like it's bad. It's not bad. I just have no interest in a chart that looks like this at the moment. Because you look at the thing that'll give you a lot of clarity on stocks is the weekly chart. If you look at this here, so that's previous point of resistance. Where are we going here? There we go. Oh, that's not what I want. I want a rate. That's not what I want. Wait a minute, boys. I'll find what I want now. Where are you? Where are you? That's what I want. There we go. So for me, there's just a lot of shit I don't like about this chart. It looks like it's kind of rejecting off this previous point of resistance. It's quite overextended, quite far away from the 80 MA. And I just don't like it, man. Because from my perspective, I'm looking for like the high probability trades. The ones that are going to bring home the bacon. And from my perspective, clear rejection, you know, off this resistance point here. The jewel kind of looking a bit droopy. MACD's looking droopy. RSI's looking droopy. And if you look at the weekly, nasty looking rejection here. Nasty looking candle forming here. From my perspective, this can come down another 8.8% to touch the 80 MA. And I just have no interest in that at all. I want to be buying into strong shit going up, not shit that's cooling off. So it just looks to me like Live Nation's cooling off. Like there's like the two most likely scenarios when I look at a chart like this is like it could fucking go to the moon, but the two most likely things it does is it either retraces, comes back down and touches the 80 MA, or it just goes into a sideways tightening range and just waits for the 80 MA to catch up. Either way is not likely it breaks out here. Either way it slows down for a little bit, because the process I use for buying stocks is exactly the same process that I use for betting on MMA. So I will literally, in my head, I will draw a table. I will just draw a table, right? Oh, motherfucker, why did I do that? I'll just draw a table in my head. And it will look like this. Oh, fuck's sake, I can't draw with a mouse. I'm fucking terrible, boys. So it will look like that, and it will basically be like pros, cons. Just like with betting on MMA. And in this column, I want tons of shit. Tons of shit. And in this column, I only want a few things. Like, you look at like Kay Hansen as a losing bet, right? A few weeks back on pre-fight bets. The list of reasons to bet on Kay Hansen were literally as long as my arm. The list of ways that she could lose were very, very short. I want to be in that situation with stocks where, you know, if you look at like if you look at like the HFC chart, there's so many more reasons to buy into this. I mean, look at this. Like, we're on the weekly now. We didn't even check the weekly on Holly Frontier. Look at this, man. Look at this. This is beautiful. You know, look at this. MACD is crossed over just a few candles ago, which is obviously a long time ago because this is a weekly. Bullish formation on the jewel. All momentum stokes starting to point up. And the thing I absolutely love about this chart, your previous major high is here. Obviously, you've got a high here. You kind of got a bit of a rejection off this previous point of resistance. You could see, you know, this wick here indicating it's got rejected off this level. But because of the formation of the jewel, because we've just crossed over from the MACD, because the RSI is in very healthy territory, for me on Holly Frontier, worst case scenario here is that we at least retest the 55 EMA, because we're already above the 21. The jewel's showing a bullish formation. MACD is in an uptrend. RSI is in a healthy position. So worst case scenario for Holly Frontier for me is we retest the 55, get rejected and roll over again like we did here. Rally up, retest the 55, get rejected and die. But I don't give a fuck if that happens, because we're 23.7% off the 55 EMA. So if I open up a 5x leverage trade on Holly Frontier now, my risk to reward ratio is so fucking strong, as I've got tons of reasons why Holly Frontier is gonna keep going up. Sorry, boys. Let's go through it. 8, 13 and 21 EMA recently crossed above the 55 on the daily. Clear uptrend on the daily. RSI looking healthy. MACD looking healthy. There's just tons of reasons. You know, the world economy is opening back up, so the fundamentals are there. More demand for oil. You know, from my perspective, you can open up a trade on Holly Frontier right now and earn 23.7% before we get anywhere near the 55 EMA. 23.7, 5x leverage trade. I fucked it. 23.7, 5x leverage trade. You can make 120% before we even retest the 55 EMA. Now, I don't give a fuck what happens when it gets there, because I'll exit my position and take 120%. If it bangs out another 500%, so be it. But you can make a nice cheeky little gain like that. And maybe it goes south. Maybe it doesn't play out. But those are the kind of trades I'm looking for. So many reasons to take this trade. But it's not quite there for me yet. Because the reason why I wouldn't take this trade yet is just even at this previous point of resistance. That previous high there. We can still come down another, 3.5%. And if you look at it, look at how the 80MA is perfectly coming to catch up with this previous point of resistance. So I will keep an eye on Holly Frontier for sure. But I'm worried that we're going to retest this 13 EMA. That's what I would be worried about here, which is obviously from where we are now. That would be a 6.7, call it 7%. Oh, no, actually, because the 8 EMA is going to catch up a little. The 13 EMA is going to catch up on today's new candle. Call it a 5% pullback, right, from where we are now. But say it moves down another 5%, and I open up a 5x leverage trade at market open, and then it moves against me, and I'm down 25% in a day. I don't want that, because now I'm underwater by 25%. I just wait for it to come back. And if it doesn't, say for example it actually doesn't retest the 13 EMA. Say it doesn't retest the 8, and today it just does this. Oh god, I need a pen. I need a fucking pen to draw shit. I need to buy a pen, boys. But then I'm not planning on doing something like this very often, so I don't really need a pen. But this would be a lot easier with a pen. Say for example it does something like this. fuck's sake. Say it does something like this. Say it doesn't come down and it just does that. Boom. Say this is the new higher low here and it just goes up. I'm okay buying in here because I know there's enough bullish momentum to keep pushing it up and setting a new higher high. If I take an entry higher, yes, you know, I might have missed out on a little bit of a gain, but it means I'm not going to be 25% underwater going too early. I'd rather go a little bit late. It's like in live betting. Remember when people, you know, people want to jump in early all the time, and I say I would much rather take worse odds and get my money into a stronger position for a higher probability of a return than go too early and fuck myself in the ass. I would much rather wait, and that's kind of like my perspective on this as well. But we've spent way too long on just this literal chart alone. Like, we could talk for fucking hours on every chart, right? If you were to take a trade on Holly Frontier, hypothetically, where would you set a limit by, and where would your stop loss be? So what I would do, mate, is if I were to say I want to buy into this today, I would just go right down to the hourly, and I would just basically look at what the hourly chart is doing. So I do actually like an entry here on the hourly, if I'm being honest, because if we look at this here, if we've got support here, right? We've got the 21 EMA just floating right above it, and it does look like price is finding support on this previous point of support and the 21 EMA. Also, this is a major Fibonacci on the jewel, so it does look to me like a bull flag. This does actually look to me like a bull flag. So it does look to me like this is going to do that. It does look like a bull flag. I think I might actually be talking myself into Holly Frontier. This does look like a bull flag. So if I was looking for an entry, I would probably say here. Because the support is found on the 21 EMA. And if I were to look for a stop loss point, I would zoom out on the daily, and I would basically say anything above $22.11 is just a new daily higher low. So this trade is only in trouble when we break below there. If you break below there, you change structure, right? If you break below there, you change structure. So if it came down anywhere above here, I would let it ride. But stop losses, I would manage this one closely. If we did start to break the 8 EMA, did start to break the 13 EMA, I would just keep a close eye on it, because what you often find on stocks is what you don't want to do is set your stop loss right below that 22.15 level, because 9 times out of 10 what's going to happen is, say for example you do set your stop loss just below this level, 9 times out of 10 what's going to happen if you break structure is you're going to go like that, change the trend, trigger your stop loss on like quite a nasty little loss, and then all you're going to do is set a new higher low, a new lower low, and then resume downtrend. So for me, I do stop losses very, very different. For me, if you want to be like super conservative, you would obviously set your stop loss below the previous, this low here, because you know as soon as you close a lower low below that, you're changing trend, and this uptrend that we're visualizing is no longer a thing. But for me, I would much rather wait for the bounce and exit here on a new lower high. Like, if you look at the structure of stocks, that tends to be how shit works. So, for example, you go back to the Tilray chart, right? I don't know if Tilray is bullish. I have no idea what Tilray is going to do. Tilray might be in like the nastiest daily downtrend ever, but what I do know is we're going to set in a new lower high before that daily downtrend really gets nasty. Because look at this as a good example, right? So say for example you're using this low here as a point to set your stop loss, right? Say you are in this Tilray trade a lot, like for a few weeks now, right? And you're in this long, and then you get this sell off. Say when you're in this long and you get this sell off, you're like, right, I'm going to set my stop loss below this low because I know if we go below this low, we're probably changing trend from a downtrend, right? And I need to get out. But the problem is, if you do that, you exit on you lose on quite a nasty loss when you know the structure of stocks is all that's going to happen is that you're going to go high, low, lower high, and then roll over and die. That's where your exit needs to be. So I know there's like different perspectives on this. I know people will just be like, fucking set your stop loss and get out. But for me, this structure is so rigid on stocks that I wait for my exit on a lower high. And, occasionally it will get destroyed. Like, occasionally, it will, like, completely just fucking go into free fall. And you'll take a big loss. But the percentage of times that happens to the percentage of times you can get out at, like, a very small loss or still in profit, just by exiting on that lower high. That's just, personally, like I say, I'm not an expert. This is just how I like to do shit. Like, just because you see that structure play out so often. That's just the way I like to do things. So, for example, if a trade starts to go south, I just know eventually, using like the high and low structures, I'd prefer to exit on a lower high. It's just the way I like to do things. That is me. But there's no. I don't think there's any right or wrong way to do things, man. That's just personally the way I like to do things. So hopefully that makes sense. I don't really know what else there is to cover, really. Like, that's about it. I can't think of really anything else. I would literally, like, my process is literally just going through every single sector in here. I would look at like XLRE, retail. This is a mess. Let's zoom in a bit. Again, I would look at like REG. How's REG looking? REG, not great, but not terrible either. Because with REG, so REG is kind of showing a little bit of what I think Holly Frontier might do. A little bit. It is difficult to say on this one, because what you've got here is you've got this nice breakout above the 55 EMA, and then you've got this uptrend. The uptrend is still intact because we're still above this previous low. But the thing that is scary on this chart is volume might be decreasing, right? Pretty low volume on Friday, which would be... Oh, no, actually, though, that's absolutely fine. So it was low volume on Fridays. There was a half day of trading for Thanksgiving. So that volume candle would usually be a red flag, because you'd be like, well... we've broken out, we're in an uptrend, but volume is starting to die down, which means a pullback could be coming. But actually, this is a very unique time, because obviously that was a half-day Thanksgiving, so the volume candle is going to be lower. Obviously, less people trading on Thanksgiving, less people trading on a half-day. So then you get the uptrend. Retest the 80 MA and a bounce. But I don't know. I don't know on that one. Definitely wouldn't take that. Again, I'm looking for really strong ones, man. And all I would do, obviously I'm working really slow and explaining everything in a lot of detail on this stream. I would literally sit here and I would like check like 10, 15 tickers to pick out like strong ones. If there are any strong ones, like that chart didn't look particularly enticing to me. Let's check like CC, is that CCI? Yeah, CCI. This is a beautiful chart. This is fucking beautiful. This is the type of shit I would buy. This is beautiful. So this is straight away showing you how the crown and cat. This is straight away showing you how relative rotation graphs can be very useful. Because if you look at this chart, right? So crown and castle, uptrend here, retest the 55 EMA, and just like with Tilray, this looks like it's going to bounce. 8, 13, 21 EMA now above the 55. Jewel showing a bullish formation, where you can see blue price action curving up, using the yellow as support and starting to come up. MACD is looking healthy, crossed over in an uptrend. Looks like it's also bouncing off the MACD, and RSI is healthy. This one would be a buy for me. CCI would be a buy. CCI would be a buy, because this to me looks like the start of an uptrend. This little rally here, retest the 55 EMA and we're off. I do like this, because you've got low, higher low, higher low, higher highs all the way up. And to me, this is another example of a great risk to reward ratio, right? Because the probability of us rolling over from here after a retest the 55 EMA, the probability of us doing that is so unlikely. The more likely outcome is that we do that, setting a new higher high, higher low, higher high, higher low, higher high, and we get in quite early on a nice little rally. However, for the risk to reward ratio, what else could happen? Right? What else could happen? Well, say for example, this isn't the start of a new uptrend. Say this is just going to get into a tightening range. Well, it's still a great risk to reward ratio for us, because what's happening if this really is going to be forming a tightening range? What is going to happen next? So we're going to go up. Wait, I need a pen. We're going to go up. We're going to set in a new lower high somewhere in this territory. Get rejected on this previous high. Then going to come down. We might set a higher low and have another go at it. Or we might fall through this previous low and go back into a downtrend like happened here. But I don't give a fuck what happens, because I do know if I buy in here, very high probability this goes up. I don't know how much it goes up. I don't know if it only goes up a little bit, sets in a new lower high and rolls over, or it breaks out into an uptrend. But I do know this motherfucker's going up. Even if it just sets in a new lower high, say at this point of resistance there, right? Look at that there. You see here, this previous resistance there, which would be a nice point for a new lower high on this previous high. Say that happens, and I enter here. That's still a 0.65% gain. 5x leverage trade, 3.25% gain. Now that's not what I want. That's not what I want. Obviously I wanted to do that. I want that. But what the 3.5% gain does do is give me room to maneuver. It means that, say for example, this trade goes bad, I've got wiggle room. Because if the price moves up a little bit, I'm in the green. And if it does come down, breaks this previous low, if my entry's here, that's not a huge loss to me. It would only be, 2%. 5x leverage trade down about 10%. That's nothing for my trading style. But the beauty of where we are here is because the 8 to 13 and the 21 EMA is so tight to the 55, you will know when this trade is going south very quickly. As soon as we break below this previous low or the 55 EMA, you know it's fucking bad news. And we're only, if you enter here, you're only 10% off that, which is nothing, like I say, for my trading style. So this is like a really safe trade for me. It's got a lot of upside because if we do break out, which it looks like we're going to with this retest of 55, if we do break out, in terms of risk to reward ratio, the upside is that. And if we don't break out, the downside is only that. So you can make much more in a trade like this than you can lose, because, you know, with the formation of these candles on an uptrend, there's space for it to form a new lower high, and then, you know, if it does form a lower high, you could probably still get out in profit, man. Like, say, I'm not saying this blue line here is where the lower high would be. I mean, it probably would be because of the previous point of resistance. We're just below that. But say, you know, you set a lower high at this point of resistance just here, you can still probably get out in profit if it goes south. And if it gets rejected, you know, say for example you close a candle there and then you close another one there, obviously it would look like you're putting in a set of lower highs and then you're going to roll over. Chances are you can still end in profit. I'm probably just fucking rabbiting on now, boys. I'm just kind of thinking out loud now. I'm like, this is how I would play it. This is just basically how I would play it. But obviously I'm going into like specifics of how to trade and stuff now. It's a super deep topic, which I probably don't want to be getting onto, because well, we could fucking write a book on that. But that would be how I would approach that one. So CCI is a nice one. And I would imagine there's some more nice ones in there, which you would get from just looking at relative rotation graphs. XLU. Were we in XLU? I can't remember if we were in XLU. That's like the strongest looking one. Were we in? No, we haven't even looked at XLU yet. EVRG. Evergy. Evergy. Don't like this one. Don't like this one so much. Just because the MACD's in a downtrend. The jewel's not showing the most bullish formation ever. I would just give that one a miss. NI. Probably going to look similar, to be honest, if it's in a similar position to EVRG. Yeah, I don't really like that one either. Although, no, I don't like it. I don't like it. Clearly in a tightening range, right? Clearly in a tightening range. Neither an uptrend nor a downtrend. Although, to be fair, there's your high, lower high, lower high. So we probably, yeah, and lower low. So it probably could be in the early stages of a downtrend. But more likely, because of the position of the moving averages, more likely in a tightening range yet, I would say. Well, so I definitely don't like that one. Would not trade that one. That one is dead to me. Why is REG here? No, I won't be in REG. So I will... yeah, I don't know what else to talk about, man. That's pretty much it. I am interested in Google, Amazon, and FXI today. I can go through the reasons kind of why. What have we got? Do you use the same approach on the riskier, smaller stocks? Yes, mate. Yeah, but on riskier stocks, so like on cannabis stocks, I won't go as big. So, for example, if I am, say for example, I am buying into Amazon, I might take out like a 5x leverage long on Amazon for like $2,000. But if I'm going to do like a 5x leverage trade on Tilray, I'll do like $500. I'll put way bigger position sizes on like stronger bull assets. So it's exactly like in betting. I would bet a lot more on Israel Adesanya than I would bet on Kevin Holland. It's just like stronger, more trustworthy assets. That's how I look at stocks. Because Tilray's fucking chaos, right? Tilray is absolute fucking chaos. Whereas if you look at Amazon, pretty tame in comparison. Same as Google. It's all to do with liquidity. It's like crypto, right? Bitcoin is way less volatile than like pick your fucking altcoin, right? Any altcoin. So that's kind of how I do, how I do that. I very much think I do take basically I trade this shit exactly how I bet on MMA, I would say. Like with the whole visual table thing. How many reasons do I have for investing in this or buying on this? How many reasons are there that this could go bad? You know what I mean? Like, I do visualize that in my head. Same with like when I bet on fighters. And when I'm live betting, I do these calculations in my head just because that's like a really visual way of weighing up risk to reward. How many ways can I win this bet? How many ways can I lose? If you've got way more ways to win a bet than lose a bet, chances are your money's in a strong position. And I take that exact same approach with stocks. So the three I was looking at this week, which I can tell you right now, I'm definitely going to be buying a few of these. So the three I've been like kind of looking at this week is Google, Amazon, and FXI. So I should like just talk you through why. So if we look at Google, the first one. So 813.21 EMA above the 55. Dual is showing kind of a bullish formation. Now, what's interesting about the dual, there wouldn't really be that much of a bullish formation on crypto. This is one of the areas where stocks are very, very, very different to crypto. Because this can be a very, very bullish dual formation on crypto, on stocks, believe it or not. Specifically for like lead bull assets. Lead bull assets like Google in a strong uptrend on the dual can literally do this forever. It can literally do that. And all the while that the dual is showing this formation, price action is literally doing this. It's just going up. And what you'll see is on the dual, where you've kind of got this formation, what you'll see is price will trend like that. So if you see this formation on like crypto, on Bitcoin, what price action would usually look like? It would be like this. Boom. Oh shit, no, I didn't mean to put that in. On something like Bitcoin, price action on the dual, if the dual looked like this, it would usually go boom, 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 boom. It would be fucking chaos. On a lead bull stock like Google, you know, in the QQQ big tech sector, what it would more likely do is, on this run up, it would do that. And then see where you have the dip off the dual, it would do that. And then on the next leg up, it would do that. And then on this little pullback, it would do that. So this, on a lead bull tech stock like Google, this is actually a bullish dual formation. Whereas if you saw that formation for the dual on crypto, you would be like, warning. Bitcoin might be about to roll over, but you don't really get that on big tech stocks. So this is actually bullish. So yeah, I mean, looking at Google at the moment, because even though we're in a tightening range, 813.21 EMA is above the 55. It looks like we've just come down, retested the 21, and we're about to curve back up. Also, this was the previous high there. And as you can see, on Friday, we closed a daily candle above that previous high. RSI looking healthy. MACD isn't great. MACD is a bit of a red flag here, but RSI healthy. Bullish formation on the dual. Most likely outcome, I would say here, is that because we've set this previous, because we've closed above the previous high, technically that's a higher low, we probably do something like this. Come back, hug this 8 EMA for a little bit. Sorry boys, my drawing's terrible. I want this orange line not to come down this far, but to just hug the 8 EMA, so maybe it'd be better drawing a straight line. Basically hug this 8 EMA for a little bit, maybe a couple days, and then after setting in another little low somewhere around here for a a new higher low off this low, you get the breakout, the all-time highs. I think that's the most likely outcome on Google. I'd imagine Amazon chart is looking something similar. So Google's interesting to me. Just 'cause it looks like it's going to break out the all-time highs. I'm not seeing any reason why it wouldn't. Amazon. Okay, so Amazon's different. Amazon is different. So Amazon is interesting to me because, again, if it is in a tightening range, you've got your previous high here, plenty of room to form a new lower high, which will give me a bit of a gain. But it's fucking Amazon. I love to buy Amazon because it only ever goes up. Retest this 55 EMA and finding support. Putting a newer high above the previous high. So it could be in the start of a new uptrend where you go, there's your low. Sorry, there's your low. Higher low. Higher high. Sorry, higher low. Higher high. Most likely outcome. Put in a new higher low and break out. That's most likely outcome. The entry's not there for me on Amazon yet because I could see us pulling back a little bit. Most likely outcome on Amazon here, I think, would be, if we look at Amazon right now, most likely outcome here, because we've broken above this previous height, you would go, there's your high, higher low, higher high, higher low, higher high. Come back, test this. Oh, fucking hell, man, I need a pen. Come back, test this 55 EMA. Drag the 8, 13, and 21 up above the EMA. And then you would get your breakout. That's most likely outcome for me. And I say that because you're starting to see the beginning of a bullish formation on the dual. With all momentum stokes pointing up. MACD has just crossed over to the upside. RSI is in healthy position. And if we zoom out the higher term time frames, a nice bounce off this big Fibonacci level on the dual. MACD starting to curve up. RSI curving up and looking perfectly healthy. And the 2-day actually looks even more bullish for Amazon. Because you can see retest the 55 EMA here and bounce. Nice retest the 55 EMA here, and I think just starting to bounce. And if we look at the weekly, just basically substitute the 21, the 55 EMA for the 21, right? Support, bounce, support, most likely bounce. And again, I don't know what Amazon's going to do in the future. I don't give a fuck about what Amazon does in the future. If I'm honest with you, I have absolutely no idea what it's going to do. But I do know if I enter a trade off this 55, I won't buy in here. I'll wait for a retest of 55. But if I enter a trade on this 55 EMA and we are stuck in a weekly equilibrium, that's your previous high on the top of this equilibrium. From where I am there, you've still got like 4.5% to set in another lower high in a tightening range. And I'm fucking cool with that because I'll give you time to either make money on this trade or exit at not a disaster. But with the way the 2-day is looking, I would imagine, because it's fucking Amazon, it does that, that, and that. Because it's fucking Amazon. Why would Amazon ever go down? Why would Amazon ever go down? Why would Amazon ever go down? Why? Like, really, why would Amazon ever go down? Doesn't make any sense. People buying shit on Amazon every day. They've got to do something with that money. So they buy their stock. Right? How many pension funds, how many 401ks own Amazon? Probably every single pension fund, every single 401k on the fucking planet owns Amazon. Everyone buys shit every day on Amazon. Chat is looking alright on Amazon. Why would it go down? There's no reason why it would go down. There's just no need for it to go down. Only goes up. Zips, do you use stocks? No, I only really use the dual, man. I find like I don't find Stokes too useful just because I feel like the dual does its job for me. I feel like I don't like to look at like too much just because I feel like it gets overwhelming. So from my perspective, with the shit I've got laid out at the moment, all I really use is what you see. I've got my moving averages, I've got my volume, I've got the dual, which kind of shows Stokes, shows key Fibonacci levels as well. I've got my MACD and my RSI. That's all I need, man. I'm happy with that. I think like the more things you introduce, like the more overwhelming it gets. I feel like what I've got out in front of me just is all I need, really. You know what I mean? That's just me personally. Like, I'm not an expert. Maybe I should be using Stokes. I'm a noob, complete noob. But this strategy is working all right for me at the moment, boys. So I don't really know what else to cover. I think that's it. I think I'm pretty much done, boys. I think I'm pretty much done. Can't think of anything else to talk about. So nice one. Is there any questions? If not, if there's no more questions, boys, I'll call it a day. That'll be it for today. I'm actually feeling pretty hungry, so I think I'll go and grab some food before I do some fight research, and I will. I'll come back in a little bit and do some fight research. I need some food, man. But let me know if you guys have got any questions. If there's no questions, boys, I can't really think of anything else to go through. Like I say, every Monday I would just go through those sectors that I love: gambling, cannabis, solar, and then I would look on this relative rotation graph. And I would probably check XLE, and I would check all of the why not? I would check all of the stocks in all of the improving sectors. I would check the leading ones as well. To be fair, usually you'd have more sectors in the leading sector, but you'd have more sectors in the leading quadrant, but because the data is from the last 5 weeks, and obviously that includes the election when everything was fucking chaos, you don't have as many sectors in the leading quadrant, but usually you would have like 3 or 4. But because of the sell-off due to the election, if you remember, there was quite a nasty sell-off like a week before the election, and then it like V-shaped recovery, but that's why you don't see as much leading in there. Nice one, Zips. I'll upload this video as well. I will put it on the website somewhere. I honestly didn't think anyone would care about this because I'm a total noob. But I will say this shit has been working really well for me, boys. Like really, really well for me. Like it works really good. Like I don't know if it'll work good forever. It's still early days, but it's been working really good, man. And I honestly think within 2-3 years I will be making millions of dollars a year from this strategy. Because it works so well. The beauty of this strategy is, I would say, like the final thing to go on. The beauty of this strategy is if you identify between 2 and 4 bullish sectors on a Monday, and you buy into those bullish sectors on a Monday, and you just watch them like a hawk on a Monday, you can get out of the lagging ones, the ones that you got wrong, the ones that weren't performing well on the Monday, at between like a 5 and 10% loss, and you can stick with the strong ones that'll give you 50 to 100% gain. So this strategy is so powerful because your losers are small and your winners are big. Because what you'll find in the stock market is shit isn't like chaotic like in crypto. It's not like with Bitcoin where you'll have an amazing day Monday and then a terrible day Tuesday and an amazing day Monday and a terrible day Tuesday. It doesn't work like that. If a sector looks good on a Monday, it's generally going to perform quite well with that, you know, higher high, higher low, higher high, higher low structure. It's going to perform quite well through the week. It's not really going to break structure. And like, because of that, because you know if you get yourself into those strong positions on a Monday, you're going to do quite well. That's just the way it works. Like, you just basically get rid of your weaker trades early in the week so they don't end up costing you more, and hold on to your strong ones. And it works great, man. It works really, really good. And yeah, man, like the three I'm looking at: Google, Amazon, FXI, CCI also looks great. I'll buy CCI today. And just keep an eye on this level, man. This level here. That level there. And do we break through? Or does that level become the new higher, new lower high and a downtrend? I would say trends are fucking huge in stocks. Trends are everything in stocks. They respect, like, trends get respected in stocks, man. They really get respected in stocks. I'm sorry, boys. My dog is going crazy. Dog is... Caesar, come here, mate. Yeah, so that is it, boys. I'll upload it to the website later on. Nice one, Moose, mate. Oh, sorry, boys. Caesar, is there any need? Is there any need? What was it? Alright, that's disappointing. So I was hoping there'd be some more Pokemon cards. Yeah, so anyway, nice one, boys. That is it. That is it. I can't think of anything else to go through. And yeah, hopefully you can use it to make some money, boys. Nice one, Moose. Nice one, Zips. Nice one, JB. I'll add this to the website later on. And boys, if any of you have got any questions, because what's going to happen is, once you start using this yourself, you probably have loads of questions. So if ever you got any questions, man, just let me know. I'm super passionate about this stuff. I find it mega exciting. Because I really think it is like printing money. It is like growing money on trees. It is super easy. Once you've been doing it like a few months, you start to spot things. Like, you get like a little bit of a sixth sense. Like, I can't, like, it's hard for me to it's hard for me to like break down. Like, it's kind of like a gardener, right? Like, a gardener probably just pretty fucking good at cutting lawns nice. And you ask, like, the gardener how he did it, and it's kind of like, he would probably struggle to, like, explain to you all the different individual tiny little things he does to cut that lawn nice. He would probably forget loads of little details, but, like, when I look at charts now, because I've been doing it for so long, I've looked at so many different charts, I can just see, like, bullish setups. I can't describe why. I think it's just pattern recognition. Like, you know, your brain's very visual, and it recognizes patterns. I can just recognize patterns, man. Like, I just know from the way the RSI, the MACD, the Dual, and the daily chart is looking. I just know that this is like a bullish formation. I just know. And I find it really hard to describe why. It's just like something in my brain that I've seen this fucking do that so many times on so many different charts. So it's one of those things, man, where you'll start to see these things as well. Even if it's not always the easiest thing to explain. This sounds a bit woo-woo. But that you could just see certain shit like this is bullish as fuck. So I hope I've done the best job of explaining it, man. If you do have any questions, just let me know anytime. I'm super passionate about this stuff. But anyway, nice one, boys. Love you all. Take care. And I will see you all soon, boys. Take care. Have a great one. I'll send out a telegram later on when we get into the fight research. See you later, boys.